So, Nicole, we actually have this little firming of the market intraday. We're back at this 4,500 level on the S&P. But a lot of things really had been in place coming into August where you should have expected the potential for a little bit of downside choppiness. Do you still expect something like that because of the seasonal factors? We priced in a lot, but also what would you do with that kind of a pullback?
So I think there's a lot to unpack here, and August is generally a lack of liquidity month. So as we close out, so it's going to be interesting to see just how choppy it gets, or if we kind of go into a bit of a holding pattern in a tight range. And then September is kind of teeing up for, okay, that's probably not going to be as easy as the first half of the year. I think the most interesting takeaway has been, with as many economic surprises as we've had to the upside, we are not getting earnings revisions following suit. And so what we've really stepped back and taken a look at is, okay, well, the market just never priced in what the bond market and economists were calling for, which was this recessionary type of event. And so with that, we just go into the back half of the year going, all right, at the surface, perhaps we still end around this 4,500, 4,600 target. We keep a lot of what we made in the first half, but the experience of getting there looks a lot different, and we start to see more of the underbelly, choppiness, rotations out of technology, and maybe the pickup in some more defensive or cyclical areas playing into now everyone's in agreement that we're not headed into this recession.
Yeah, I guess the big question is the market going to be satisfied with looking toward 2024 and the potential for a resumption of earnings growth if the economy can stay on firm footing, or if we've had just this relief period where, okay, we didn't get a recession yet. We also didn't really have a super severe downturn in valuations, as you mentioned. So therefore, is it just a kind of a temporary pause in the difficulties?
There is one bit of optimism that I do really think that we're overlooking, and it's productivity. And we're starting to see productivity numbers come back. We were talking about them being the worst they'd ever been. Now we're seeing an incremental tick up. When we think about forward applications of AI and the likes of all the investment into digitization, that will come forward into revenue. And so when we think about productivity, if we continue to see uptick, that is where I start to think, okay, it could look even better than projected in 2024, but we're going to need more to get there. And so right now, I think it's going to be a lot of how does one think about the positioning that took them this far year to date, and where do we want to be for the back half? Because if you had cash and technology, you did fine.
Absolutely.
You did great.
And you might be willing to just try to protect that for a little while.
Exactly.